So we'll answer another set of problems for adjusting entries. So here is a unadjusted trial balance of CCC Consultancy. Okay, and these are their account titles. Below, we are given here the additional information for adjusting entries. So we will make adjusting entries for each. All right, so let's start. For letter A, there was a total of 35,000 worth of rendered service from the unearned revenue. So if we try to understand it, from the unearned revenue, you look at now your unadjusted trial balance. We have unearned revenue 50,000, and the information tells us that there was worth 35,000 of services rendered already. So when we render service, meaning it was already earned. Okay, so we can now declare the 35,000 as a revenue or a service revenue. So we have to increase our service revenue by 35,000. How do we increase service revenue? Credit, right? So we're sure that our entry here is credit service revenue by 35,000. So what would now be our debit? Okay, our debit would be the unearned revenue. So from 50,000, okay, 35,000 of that, write it here, of the 50,000, okay, 35,000 of that was already earned. Okay, so meaning the remaining 15,000 was the unearned. So we should make our unearned revenue into 15,000 only, instead of 50. And how can we do that? We have to decrease unearned revenue. And to decrease unearned revenue, we have to debit it by how much? 35,000. So debit unearned revenue, 35,000. There. Okay, explanation would be adjusting entry. Okay. For rendered service. Okay, moving forward, letter B. Upon count, only 3,500 worth of office supplies were left. You look at now your unadjusted trial balance. Okay, originally our office supplies were at 8,500. 8,500. Okay, and the problem tells us here that 335 worth of office supplies were left, meaning these were unused. Okay, so 85 minus 3,500, that gives us 5,000 used supplies. Okay, so meaning when we say used, we have already incurred that one, and we should declare that as an expense already, which is your 5,000. So that would be debit supplies expense 5,000. If you try to remember, we are using here the asset method, right? Because when the office supplies were bought, what we use is the asset. We recorded that first as an asset. So meaning asset method, when we adjust, what we will record would be the used portion. Okay, supplies expense 5,000. Okay, and then what would we credit? Try to look at your office supplies is at 8,500. It should be only 3,500 because it was the only worth of supplies left, right? Meaning we have used 5,000. So from 8,500, we should make this 3,500 into office supplies. And that is to decrease now 8,500 by also 5,000. How do we decrease office supplies? We credit office supplies by 5,000 pesos. Okay? Okay, explanation, adjusting entry. We have adjusting entry for used supplies. Right, letter C. Okay, rental paid was good for 6 months. Okay, the rental paid was good for 6 months. So we have here prepaid rent of 60,000. Okay, we have to expire 1 month because from March 1 to 31, that's 1 month, okay? So we have to record depreciation expense worth 1 month. 60,000 is good for 6 months as mentioned. So that's 60,000 divided with 6. That's 10,000 per month. So that would be debit depreciation expense. Sorry. So that would be debit rent expense, right? Because 1 month was expired. So we should record that as an expense already. We have used it. So that would be 10,000. That's 60,000 divided with 6. So it is good for 1 month. Then we will decrease the prepaid rent. Now, since we have used the 10,000, this should become 50 only. So to do that, we have to credit prepaid rent by 10,000. Okay. Explanation. Adjusting entry for expired rent. Letter D. The office equipment bought has a salvage value of 3,000 and a useful life of 5 years. Okay. The formula in computing for depreciation expense, that's for a the simple method, that would be your asset, okay, which is here in the problem. This is office equipment, so the amount of the asset minus the salvage value, which is at 3,000. Okay, salvage value is that amount that when the equipment is already not used by the company, meaning you can sell it at that amount. Okay, that's a salvage value. So 18,000 minus 3,000 salvage value and divide it with the useful life, which is 5 years. 5 years useful life. So that would be 15,000 divided with 5. That's 3,000 per year yet. Right? So we have to record here 1 month. So per month would be 3,000 divided with 12. So that would be 250 for the month. So that would be debit depreciation expense. Okay, office equipment, or let's just use the one depreciation expense since we only have one long-term asset. That's 250, and credit accumulated depreciation 250 pesos. Okay, the depreciation expense, if you remember, this is recorded as under expense, while accumulated depreciation, this is a contra asset account. Right, letter E, unpaid salaries, 9,500. So how do we record this one? Unpaid salaries, these are salaries that are accrued. Right, we have incurred it, but we didn't pay yet our people. So that would be debit salaries expense. Okay, of 9,500, then credit salaries payable of 9,500. Okay, explanation here. Sorry, I didn't write explanation. So 1 month depreciation of equipment. This one would be unpaid, okay, or accrued salaries. Okay, so you can see this file in this video. I will be uploading this file as well.